Hey traders, Raghee here, and in this free recap video we're going to talk about crude oil because I think it's a great example about how we can take a look at longer term. This is an end of day time frame setup, and talk about how I use price movement ranges to get into the market regardless of whether it's a buy or a sell, and then also how we use price movement ranges to get out. So let's talk about this one. So first of all, there's really three legs of this trade that I'm going to walk you through. First of all is the entry that we got here. This is number one. This is a move to the downside that was based upon a daily or DPMR. And a DPMR just stands for daily price movement range. In other words, how much could the market move in one day, right? And then here we had another level as the market reached what was an overbought zone that we have been talking about since last Thursday and then revisited again this Tuesday. What happens when we get up in this zone? And is this wick, is this move exhaustive? And what we had done that day is move the upper end of the price movement range. A typical upper end price movement range with a 68% probability in crude oil, again, the upper end for the week is $2. So $2, and then I could factor in an additional amount of points based upon what we call the 32%. In other words, once we exceed the 68% probability, how do we account for the 32% that's sort of the unknown? And then also, is this still trading within a range that we would feel is one, overbought, and two, why is it moving that way? And the cool thing about the why was, this has to do with the hurricane. This is very much a market that was responding to Hurricane Gordon that was ripping up through the Gulf. We talked about this the other day. So if you caught the free recap video from yesterday, you kind of know the saga here, right? You know how we got to this point. What's really interesting and what I want to dive into in this video is the exit. Exits are where trades are made, right? And I keep recalling this story about Everest. That's my drawing of Everest. And up in here, where the air is real thin, and these are clouds, don't you love this drawing here? It's the top of Everest that once someone gets up to Everest, they get up there, but when people succumb to the climb, it's on the way back down, and typically in this, what they call the death zone. And really what that was for me is it wasn't that people got in trouble climbing Everest, entering, if you will. It was on the exit. It's the exit that's so important. And if I think about the fact that an exit is where we get paid, an exit's how we manage risk, that really should be how we devise our entry. A lot of traders are in an entry-exit mindset. Entry first, exit later. I'm trying to do my best to get people to think about the exit first. How are we going to get back down off the mountain? So let's talk about how we do it. So how this market was selling off. The high here was 69.02. So we just talked about the upper end of price movement range being about $2. So I know that on an extreme move, on any given day, an extreme move would take me down to 67. Now, I could also look at the price movement range for today, Thursday, which is really important. A lot of calculations like this cannot be as specific as the hour of day or the day of week. Now, with the numbers that I use and I teach in the chat room, we can be very specific to the day of week and to the hour of day. And even look at the market in 15-minute segments to project how far we could go. So I'm already thinking the market's capable of 67, but it's not going to be unusual if the market only moves $1.40 to, maybe in that area. Let me show you what I mean. So the expected price movement range for crude on an end of day basis for today would be as low as, let's go here. Let's actually go to crude, shall we? Would actually be, you can see about $1.60, $1.40, or $1.20. Now $2 is the upper end. So if I know that's how much the market could go lower, and I'm looking to take profit, which we were looking around the 67, 62, the first question is, you gotta remember, gang, we were trading up at 69 earlier. So for me to make a call for 67.62 might seem crazy until you know the daily price movement ranges. So not only do we know this was actually very possible, we knew we could get down to even the 67 level. Today's low, by the way, 67 even. Pretty damn accurate, if I do say so myself. And I hope this was helpful. I hope understanding that there are hidden sort of support and resistance levels on a chart that aren't always clear, because we're not gauging this by previous highs and lows. We're gauging this by time and volatility. And those are the kind of things that I think give a trader an edge. All right, hope this was helpful. See you in the next update.